hour.
All right, so good night, ladies and gentlemen. So this is going to be this is our session. First off, many to come.
Already know. Yeah, so the lack of this.
Mm-hmm.
Alright.
So first, what I like to understand where you guys are with understanding market structure. Just kind of want to have a brief understanding of where and what you understand. Briefly, a long explanation. Just tell me in a small words where you understand about the market and how you would take trades. Like,
All right.
mm-hmm.
All right. For Kenish, huh? Yeah, Ken. So market structure will go from it's the bigger time frame to the smaller time frame for your analysis. Whatever is happening on the bigger time frame is happening on the lower time frame, but in smaller steps. So for example, if you were to draw lines on the bigger time frame, you will draw smaller lines on the smaller time frame, but you basically going in the same direction, now up and down pattern. But if you understand what I say.
Yeah, I understand. Using the zigzag.
You know, like the zigzag, but it would match up with the bigger lines, which will be more smooth, circle like.
Okay.
So it's moving in the same pattern, but it's just zigzag in the big pattern.
All right, then cool.
Right.
All right. What about you, bro? How you see the market?
Huh?
I say, tell me about you. What about you? How you see the market? Like, how you see the market? How you understand from your point of experience about market structure?
Alright. So what my over so far is a little bit of power of 3 from the daily, then to the 4 hour, marking the highs and the lows where the market will more like it's a turn. And then we go down on a smaller time frame once we see the market reach in the zone of the highs or the lows. And when we zoom in on the lower time frame now, we are looking for a market structure shift and then a pullback for execution on more likely the 3 minutes or the 1 minute time frame.
All right, then cool. All right. Okay, you basically explain a strategy, but me accept the explanation there. So me gonna do two markup schemes, one for up and one for down. Pay attention. Let me just clear this. So we have the two markup schemes, one for up, one for your uptrend. So the market moves. So say for example, this is a market movement on the 4 hour. And 4 hour time frame, and it's breaking structure going higher. Or you know what, this is too big. So say for example, this is a movement on the 4 hour time frame. The market pulls back, breaks structure, move higher, keeps moving up. Break structure, pull back, and keeps going up. All right, so we know that in an uptrend, the market operates based off the previous measure of movement from the low to the higher, and the higher to the lower, and the lower to the higher. So basically, price is being pushed from every previous area where price has been before. So the lower part of the market the low, push momentum and increase price, creating a new high. And when these buyers push the market higher, them exit or them they have taken profit at these highs here. Once profit is taken, market pulls back to discount. What is discount? Now, you know, always hear me talk about premium and discount in the group. Some of them might not understand, but in
No,
the
but may I assume there's a retracement.
it's not just simply the retracement. You have to also understand. If you look on it in the sense of reasoning, because
Okay.
trading is not only just simply trading. You
Okay.
reason out what take place with price, with money in the market. So you see, if you can understand and you see my point of view of how I'm seeing the market, it makes it that much more easier for you in trading, because when you go in on the market, you're not just simply looking at a high and a low. You're looking at price action. You look for money a move, and you look at what money is doing and where money is being left to be taken, where the market is aiming to be, take the money from at a longer time. But hold on. Okay, so the market operate in an uptrend, in a buying market, or any market at all, even the economy that we are currently in. Price moves based off premium and discount. So you buy something at a discounted price, you buy an investment at a discounted price, you buy a piece of land at a discounted price, and in maybe 2-3 years, you're gonna sell that piece of land at a premium price of equity, and that's for a buyer's market. So as long as you're a person seeking to look for profit, if you're seeking to gain profit, you're seeking to buy something at a discounted price where there's less demand. Maybe the demand for the market of that particular product is going to come somewhere years down the line. So it's the same measure of how you look at how money operates, not just in buy and selling. It's the same way of which money moves in the same market structure. The difference is that you have to learn how to apply these same schematics back to looking at market structure. That's where the difference is made. So with that said, we have we have a low area right here. So we have a low, and this low put in this high. This low is responsible for putting in this current high, where buyers entered here, bought the market up to a higher price, made a profit, exit, and the market has to come back into below the 50%, back into discount, so that they can look for an entry again to buy, to push the market higher, to create a new price margin, which is this higher zone that we have right here. So the essence of me not going in depth, but just simply explaining this minor concept is that as you're looking at a buyer or a bullish market, you're looking to enter in a discount. And if I were to per se flip this entire thing inverted, as if I'm looking at a seller's market, so I'm flipping this right now. So right now this is flipped, inverted. Now we are looking at a seller's market. In the same way, this market is a downtrend. This market here we are looking on here, so is a downtrend we are looking on here. So we are going to apply the concept of premium and discount. So now, imagine now you're in a seller's market. You know it's a seller's market, so you're looking for sales. You only look for sales in a seller's market. Where there's a downtrend, you're looking for a sell. So in this specific market now, you're looking for the market to go above the 50% into premium, buy into the premium zone, and you're looking for area of rejection. You're looking for market structure shift, a change of character, as we would call it. Market structure shift is the same thing. And you're going to look for a distribution candle. We call it that distribution candle, that large selling candle that shows you the selling momentum, that initial selling momentum, that yes, the market is changing direction now and moving to an area of sellers. So, point to note again, you buy in discount and you sell in premium. And how you measure this premium on the market based off structure and technical analysis, you're measuring this based off the previous swing high and the previous swing low. And you're going to measure it from here, from this point up here, so to this point here. It's always the previous, not the current. Previous. Just as if I was looking to take an entry at any point here, I would be looking to take an entry from the previous high, this high that put in, this current low. This is where I'll be looking to take an entry. After it pulls back above the 50%, I'm looking for an area of rejection, change of character, and I would enter on that retest. But I'm not going to dwell upon that too tough. Anyways, so I'm clear that. Reinvert back the chart to where it's supposed to be. Alright, so we know say we have uptrends and downtrends, but a crucial factor that we are not looking at is that the market operates between two crucial points. The main point where the trend broke to the upside, and also the main point where the trend break back from the upside to the downside. You see, if you can find those two main zones where the market break to go upwards and the market break back to go downwards, I call it the key level of that trading range. I call that the key level of that trading range because that key level determines whether the market is going to either push from that point to go higher or push or break through to go back lower. And I also use that key level as a point to take profit. So I use the key level as an area where I safely take profit. So I know say between the key level, I know say for sure the market is gonna buy straight to my take profit point and now pull back. So I have no reason to worry about my trade going up and pulling back and clearing out my stop loss. No, as I enter, it's supposed to move straight into money. Okay.
Oh,
Yeah, man. I keep it basic because I don't want to set too much and overload the whole information. Anyways, let me just do a small schematic for. We have an uptrend here. This is our uptrend. So we have an uptrend here that became a downtrend shortly after, and we're going to look at what caused that change crucially. Now, we have swing high points, we have swing low points. Swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high. Now, point to note, just looking at this uptrend, the last area of price that broke structure. So this is the last legitimate area that broke structure of the uptrend. The last legitimate area where you can say, yeah man, this is the last confirmed area that the market broke to the upside. From there, and just like previous areas of the uptrend where the market broke structure here, it broke structure below this area and continue buying up. The difference at this point is that the area that broke structure from this low point, this low that put in this current high, we can see that instead of going higher within this zone, it broke back the same low. Said low was taken out that put in this high. And since this would be an irregular movement of the trend, this would be an irregular movement of the trend. This would be an irregular movement of the trend. This is the irregularity that happened. We call this a market structure shift or a change of character. But me no want to say change of character. Confusing. I'm just alright it at market structure shift. So the market structure is shifting from an uptrend now, conditioning itself for the preparation to change into a downtrend. So I call it MSS, market structure shift.
Right.
Okay, so this is a market structure shift. Now, at each of these areas of the uptrend, we have a demand zone. There is a demand zone here that is the market pulls back to buy. Each of these zones have a demand zone that the market is respecting. There is a demand zone at each of them. There is a bullish order block demand zone, the same thing at each of these zones. Now, at this low that put in this high, we also have a demand zone here. There is a demand zone, and what was supposed to happen is that the market was supposed to pull back into this demand zone and continue to the upside. Now, if the demand zone gets broken, this demand zone that gets broken, as we can see here, it get taken out right here. So we call this a flip zone, or the legitimate word I would call it a breaker block, because the bullish order block has now becomes a breaker block. Why it's a breaker block? Because it was broken through. So we just call that a breaker block
Oh,
zone. It was broken through. Previous era of demand are breaker block. All right. Now, once the market now break and give us the major structure shift here, so to confirm that the market is definitely going for a sell, we need an additional break of this current low, because now that it has dropped, it it has not confirmed in sequence that we're now in a downtrend. And to confirm that we're now in a downtrend, we need a break of structure downwards to confirm that now this downwards break is confirming that we are now in a downtrend, downward trend, right? So we need a consecutive break of this current low. And once we get a consecutive break of this low, now we can say legitimately we have a bearish order block inside the breaker block. So we have two confluence, or two era of confluence of confirmation, strong confirmation. This was a previous era of demand that became a breaker block. Now we have a demand zone sitting in it. So this is a optimal point of interest. And not only that, this area is also above and in premium, because now I will be taking my Fibonacci from this high to this previous low, this current low, this high put in this low, this high put in this low, and now I am going to draw my fib. Let me just move the gun box, because the gun box and the fib is similar, but they're not the same. So I will draw my Fibonacci here. I'm kind of clean it up. Okay. All right. So from the high now, I'm gonna draw from the current high, the high that put in this current low here. I'm gonna draw it from that high to the next low that is there. Yes. And what I can observe, let me just use the zoom in tool and zoom in a bit. Okay.
can throw a question in there?
Yeah, man, show the question.
All right. right? Which way you have the market structure shift, the box there, right? From the one that turned into a breaker block.
Mm-hmm.
Is it the leg going up to the high, or the leg that pull back and break the structure going down? Which one of them you would is it the same order block you consider to be the breaker block?
We'll get to that, man. Once I start looking at the actual structure,
All right.
you gotta see how it play out
Okay,
and
all
it's
right.
reinforced. Hold on. But valid question though. Valid question. That's an important question. All right, hold on. Okay, these are all you need. So from this high point, I have the Fibonacci, but Fibonacci from here to this particular point, and we can identify that we have the 0.05 here, which is 50%, and above that 50%, I have two zones, two markers, two numbers that I think is a very significant zone. And what I would normally do, I would normally just have a box here within this zone too, just to signify, say, it's in this particular area I am looking for the cell, right in there. Sometimes you can do that, you don't have to necessarily. I do it sometimes, it doesn't really matter. So I'm looking for the market to pull back into into so this high to this low, and I'm looking for the swing to pull back above into premium, because we're now in a seller's market. So we only sell things that we have. You have a car and you buy the car as a fixer upper, you throw on two rims on it, a nice bumper, you spray it up nice, clean it up, and you buy it for 400,000. Now that the car in a premium condition, premium state, you gotta add a premium price to it, 800,000. You gotta want to sell it for that. Same thing. So you're in a seller's market now. You want to see the market pull back above 50, because you don't want to sell where you invest so much in at 50%. That don't make no sense. If you buy something, have it for 2 years, and you have to sell it back at the same price you buy it at. No. And a consolidate, you try consolidate, or you try for, get back the same money. Or you run go overseas. You try make a profit off it, same way, even though you didn't drive it. You was driving it. So naturally, in a seller's market, you're looking for a sell in premium. And the 0.786 is the highest point of interest within that zone. As long as it does not break this high, it mustn't take out this high. Once this high is taken out, the whole strategy change. That's it. If it get taken out, means if go up and sweep, it means it a break back to the upside, because this would be confirming that the market is shifting back from this point back into a buyer's market. So you know want to see the point. This should be a protected high. We call it protected because it should not be swept. If you go on your candle and you draw one line from the wick here to go across, it the candles them that trade within this zone not supposed to go up and sweep or close above it at all. None at all. So we call that particular thing, we call that the market, or the swing high being protected. All right. Now, I guess this would probably properly explain, you know, in a great summary, what a trend is like. Be it uptrend, be it downtrend.
Mm.
This would properly explain it. So, with that all said, let us kind of just jump into the actual market, because sometimes looking at these nice little swings will look so clean, you feel like you can go take a trade, and when you see the actual market, you start get confused because you don't know which high is which high and which low is which low.
Mm.
Show you off. I may understand, so them things you can play out.
Yeah.
All right. So before we get into it, there is something else we have to discuss about the time frames. We use a thing called time frame correlation. And what I mean by that is that we are correlating each time frame in significance to the other to see how price operates. Because while on the 1 day time frame, 1 day represents one candle. That one candle now on the 1 hour might just be 50 different candles. So on each other time frame going down, that one candle that you found on the 1 hour, is actually 50 candle. Sorry, that one candle you found on the 1 day is actually 50 candle on the 1 hour. And that 50 candle that you find on the 1 hour is actually 1,000 candle on the 1 minute. So there is a difference. So time frame correlates very well. So while I'd be looking at um, market structure and how you actually step in and use time frame, I would say I give you guys a summary card and I like one up on this thing the whole night. So while looking at the market, any period at all, the first thing and the first place you have to always start from, you have to always start from looking at where the market has given us a previous break of structure or a previous market structure shift. And also, the first thing you need to do is you always have to look and identify the trend. So it's always a good thing to go on the 24 hours or the 1 day and look at the trend of the market. So by doing so, you can basically have an idea that yes, overall, it's a buyer's market, overall, it's a seller's market. How you can do that? You can either do it by drawing lines, a trend line with the candle. I normally use the line chart and also the candlestick chart to assist me with that because it gives you a greater confluence. I use the parallel channel box to assist even more. And it helps me a lot with correlation. So just looking at the line chart, I can see that we have an uptrend from here to this point. So this is an uptrend. So this uptrend tells us that we're in a buyer's market. The market is buying. We haven't gotten any form of major structure shift or any change of character as yet. So because we haven't got any of that, we're not gonna create the delusion that it looks like it might sell. Never create the delusion of a sell where there is no confirmation that there is. So while we have no confirmation for a sell, we're still going to be looking at the market for a buy. All right. On that note, we have to identify along the line where are the breakup structures of the market, where the market are break structure. And just looking, if we were to look very well, let me zoom in a bit. In this particular area, where is the highest point? The highest point is right here. That's the highest point of the market. The lowest point is right here. So that essentially meant this low put in this high that we have here. And this high put in this low. And this low,
Okay.
yes, this low, we call these the external swings. Because even within this current trend that we're having, we're looking at, we can still identify that there was actually an internal uptrend right here. So we have intra-market, and even so, just right here too, just looking at this particular area, I can basically see that there was also an uptrend. And I can see that the uptrend broke to a downtrend. And then we can see say, the downtrend broke back into a small uptrend right here. So basically a lot is going on. So reading the market is it's not a straightforward thing. You have to be able to identify what price is doing at all time. That it became a downtrend right there. And it now seems as if at this point it's becoming back it a turn back into a uptrend. That's what it looks like. Looks like to me say that turn back in a small uptrend. Well, anyways, looking at the external swings, that's what I can see. I can see this high putting in this low, and this low now putting in this highest point that we have right here. Can you share back? If I don't see it gone. Oh yeah, bro. You hear me? Oh yeah, you guys hearing me?
Yeah, bro.
Yeah, bro. Give me a name for
Yeah.
call by because I can't call by production.
That's a Freddy.
All right, Fred.
Freddy.
All right, Kenisha, you been there, a listener? It like you
Yeah.
gone a while ago. Ken, Kenisha,
No,
hello.
I'm there. We just turn off the mic.
Okay,
I'm
okay, okay,
here. Yes,
okay,
I'm here.
okay. Good, 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 good.
Just turn off the mic.
All right, cool, no problem. All right, back to what we are saying, So Fred, based off, we just go back. Basically, we just go a bit. We just go back to basics tonight, in a sense, because nothing wrong to go back to basics. It reveal new things to the understanding and to the eye. You know, and sometimes it just wave out the confusion. You can see things much clearer. But basically, you can summarize to say that us looking at the higher time frame, we're mainly focusing on the external swings. So anytime you look on the 24 hour, the 4 hour, you look for the highest point and the lowest point. Highest point, lowest point. And sometimes it's always good to use the channel box because the channel box will assist you. If you have an issue, grab a channel box, touch one, touch two, extend. And just extend it to the the furthermost part to the left or the swing high. Alright. Come on for this. So now that we have identified that we're in an uptrend, the next thing to do as you go up on any market at all, it could have been volatility 25, could have been step, doesn't matter. Any particular pair you go on, the next thing you're going to need to do is observe where was your last break of structure. Observe the current intra-trend that is there. You want to find the last break of structure that happened. Now just looking at the 1 day, I can see that this week here was a sweep, and the reason why I'll call that, I haven't even gotten to that yet, but let me do a quick thing on that fast. So you have the candle body, and you have the candle wick. Now the top of the body here. Say for example, let me use this as a red candle and say this is a selling candle. So this is a sell candle. So on this sell candle, the market opened here at the top. It opened at the top here where the body is. And once it opened, the first thing it did was buy. It bought in the upward direction. When it bought in the upward direction, buyer stepped in and trying to buy up the market. And seller stepped back in and sell it down, closing right here. Once them close here, the sellers continue to push from this area all the way down to this wick and this end. Buyers step back in, push back up the market, and close price here. And that's basically how candles work. So the candle body close is a significant area because the candle body shows the size of the momentum of price of how much money is trading in that particular day or that 5 minute candle, how much money was trading within that 5 minute session, how much money was trading within that 1 hour candle session, how much money has been trading within the 1 day session. It shows you the amount of money that got through the market within that particular candle session. Just like looking at these green candles here, we can see that they are large and them tall, so we know say buyers in the market right now. Them buy up from here, so close out, and them a wait for the market pull back into discount again, so them can step back in. The buyers them can step back in and start buying again to the upside. All right. If it's a selling candle, if it's a buying candle now, if this is a buying candle, buyers enter the market here. at this body opening. And once the buyers enter, well, sellers came in and tried to push down the market, failed, and buyers stepped in and pushed the market all the way up here. Sellers re-entered, pushed down, buyers and sellers at war at this point until them finally decide so them will close at this price. And that's basically what happened when you look at the candle wick and the candle body. So when you see a candle wick get swept like this, we call this a sweep of liquidity. Because this candle week to week, this week to week here, what you're looking at is a sweep of liquidity, whilst a candle wick to a candle body is a break of structure. Why? Because it's price where price closed or within price. Price actually took out that high where price was at great momentum, pushing. So this shows a significance or confirmation say, yeah man, price closed bullish, so the market is going bullish. At this particular end, we can't say for sure it's a price close as a seller's market because price never closed on the body of the seller's candle. And because price never closed on the body, but on the wick, what instead happened was sellers entered the market here, buyers pushed up the market a bit, sellers stepped in and sellers went down, pushed down the market, but never have enough momentum to stay down there so the market could close as a seller's market. And instead, because them couldn't do that, what they did was sweep, take away the money that is remaining here. All of the early buyers them take out them stop loss, and when they take out them stop loss, now it use that as fuel to push the market higher. That's how price work. So basically, at each of these lows that we see here, liquidity is there, liquidity is here, liquidation is here, liquidation is here. Each low where somebody enter from before and buy into, make a money off it and take a profit. He has left money at that particular area. And that was an area where money was traveling through. So we call that area of liquidity. Or in an uptrend like this, I would say all of this right here all of this are money. All of this is liquidity. Money to be liquidated. Maybe not your money. Maybe you already enter and buy and come out of the market. But several other people in the market same way with for their money I expect that the market to go higher. And them just in here so sitting and waiting. Enough people buying and have them trades in here waiting. So all the market is going to do at some point is pull back and take out all of them stop loss and blow them account. All right. Now, not because we have liquidity here, it means that the market is going to immediately go back and take it because we're in an uptrend. So the market can't see every liquidity like what they down here. So or what is down here and come and take it immediately because it just appear. And I say it work. The market is following and trading as an algorithm. So it have to follow the algorithm and it respects the algorithm. So while we're in an uptrend, what you have to take to note is that if the market takes liquidity on one side and fail to break to confirm it's going for a sell, if it sweeps one side and breaks the other side, that is a schematic for a buy or a sell. If it's a buyer's market, it's a buyer we are looking for. And this downward candle that went down and took liquidity is a significant candle. We call this the last buy to sell candle. Or we call this the order block. Because it's the last down candle before the up candle. And
Buy to sell.
last buy to sell. We call it a bearish engulfing. So the bearish engulfing would basically be something like this. And the a buy candle beside it. Convert this to red. So we have a buy candle, we have a sell candle here, and this sell candle went down and swept liquidity. It swept liquidity, and then this buy candle open. When this buy candle open now, where the candle close above the top of this seller's candle body, we call this a market structure shift. So it is safe to say that what we had here from this candle, after it swept liquidity on one side, we had a market structure shift right there. That's what we had right there. We had a market structure shift. Sweep liquidity. And now it's pulling back to the specific candle to retest it and continue to the upside. We used to have a thing. We used to have a thing where we used to sell when we used to send around at the group before. Name the candlestick Bible. Me have to resend it back to the group. What the fuck? Me have to resend it specifically to you and Kenisha. In that
May I
candlestick,
have it, man? May I have it?
and if you go through it, man, you're supposed to learn about bullish engulfing candle, bullish engulfing,
Right.
bearish harami. Is bearish?
I have the book.
You have it. You not study it. You
No,
not.
we study it,
Me,
man.
Maria chapter 2. I'm using it, man, but slowly.
Slowly.
Because you have to learn how to can read candle signal too. Because right here, so this is a candle signal. This is what we use. Because we are looking for this for the higher time frame. Because once we see this for the higher time frame now, this is where we are going left from the 24 hours now to the 1 hour or the 15 minute. Because we just want to see this. Last down candle, then these buy candle here. This is the signal. And once we get this now, the candle body is really where we focus on, because the candle body is where price is at. Not even the wicks. The wicks are not even important to me.
Okay.
It's the body we highlight and focus on. The last sell candle body. Right?
So the wicks them only important when you try identify if there is a sweep then of liquidity.
Right. That's the only time it is significant.
Okay.
It shows you what to do. Right? And just like this, before the market make any kind of movement, it has to sweep one side before it moves. Look here. At the top of this particular part, we see a sweep. And after the sweep, it drop for your sell. We get a sweep here now. What we're gonna expect for happen? Get a sweep, it push, giving us a. This is where the market had a market structure shift right there. Right there, say get a market structure shift. And what it do? It pull back. It pull back in here, so.
All right.
It pull back right in there, so, and drop.
And that's based the shift started with the bullish going up.
Right, because mind you, right, because mind you, just look at this trend. This trend is a downtrend, and look at this wick here. This wick is a high, So this wick that we have right here is actually a high, and this is a high. And what you can see about each of these highs in the downtrend is that each high is lower than the other. So this high is higher than this high. This high is higher than this high. This is higher than this. This is higher than this, and this is higher than this. So this is really the point where the market push from to break out of this trend, and then it dropped and broke back this area that pushed price up. So this is where we had the break. Like I'm saying, the market is very, very easy. Sometimes what we have to do is read what market are do. Read the trends. Read the trends. Market structure will show you what it is doing. Just read the trend. Trend within trend, but sometimes it take me a while. It's only easy me I say it, yes. It will take you a while to start looking at the market that way. Not because myself read and market structure shift, it means so you have to mark up the whole chart. Me not tell you to confuse yourself. Mark up only the significant areas that matter. Me not tell you to go up on the chart and load it up with a whole heap of mark up. A confusion that not gonna work. I go show you off. Keep it simple, keep it clean. And you did mention thing there. You were mentioning
Break
before
up
about the
on the
charts.
other block.
You mentioned about the chart being clean. So when I'm setting up my chart, I kinda like to use colors that I'm comfortable with. So I go to canvas, make the background white, and the market have a thing for you show grids and stuff like that. The grids kinda, if you want to work with the grids you can, because the background is already white and the grids are like some black lines. I just turn the grid lines to white, making the entire background white. And you can change the text color to anything you want to change it to. And the candle bodies now you can change the red candle or the seller's candle and back to red. Doesn't really matter, to be honest. I just prefer green and black. That combination kind of work well with me. Prefer that combination. And additionally, for when time you want to focus on a focal point in the market, this zoom tool what we have here, so it's good. You can click and draw the box here. Zoom out and just focus on where you want to focus on. Adjust these areas so you can see where you look on specifically. All right, back to what we are looking on now. Back to what we are looking at now. Let me remove this. Clear this now. So we got a sweep here on this side, and what we can also identify with that sweep, we can identify that at this point this is actually a downtrend. This is actually a downtrend that we have here. So we have a downtrend right here. So, and if we go on the line chart, just to make things a bit clearer, we can see that we have a higher low. So we have a higher low. Sorry, lower high, lower low, lower high, lower low. This is the last lower high, and this is the last lower low. So we can say that this was the last break of structure of that sell trend. Right there is the last break of structure. Right there. And because we got a last break of structure here, and mind you, this is a downtrend, right? The market did the unspeakable and broke here, giving us a market structure shift, and that is how we got the market structure shift. And the reason why I use the line chart is just to break it down a bit more, just using trend lines and using the channel box that we have here to show you that in the downtrend, it's just the same easy thing after just looking at the market as a trend. So that was the last breaker structure, and that is why we got a market structure shift right here. So, and naturally, the candle that sweep the liquidity here. So, sweep this candle that sweep the liquidity before the buy
The other block.
is the order block. Is the order block. And naturally, if you look for enter any form of trade, any trade at all, and you follow the schematic um of the order block and the market structure shift and the trend, we know that this low should be protected according to your trading management. This low should be protected, and hold on. So this low should be protected. So therefore, what that means is that you are entering. You're entering here. Stop loss is below here, and you're seeking to take profit. Let me see.
Here.
I would say give it a 1 to 3. Give it a 1 to 3 ratio. 1 to 3 ratio is basically um. So it's a risk reward ratio 4.93. 1 to 3 is somewhere in that range here. So you'll be aiming for a 1 to 3 at all times. At all times, 1 to 3 is always the ratio we always work with. But this is just a 24 hour. So 1 to 3 upon the 24 hour, if we catch this on the 5 minute or the 1 minute, then it would be probably 1 to 50 thousands of dollars. Essentially. Thousands of USD. So you don't know.
1 to 50.
1 to 50. So this is the sip on the 1 hour or the 1 day. Yeah, man. You catch this on the 1 minute, man, and you get all a 4 lot out of it, a 4 lot size, and you ride this a train for the next 3 days. So, oh God, man. Remember, say one day candle, This is actually one day candle, So you'd probably get all seven one day candle, 1 day candle out of it. Yeah, man. $6,000, $7,000 is not far. Something like somewhere in another region there. All right. So we look on 25 this is step index on the 1 day. And this is our order block. I'm gonna use the magnetic tool here. So this is the magnetic tool. Kind of clean this up. Okay. It's magnetic tool here. It kind of help if you perfectly grab the candle from wick to wick perfectly. And I kind of like to use the gun box to go from wick to wick and identify the 50%. So normally the thing about the 50% of highlighting the order block, the market sometimes pull back to 50% of the order block to buy. Sometimes, in some cases. In other cases, it buys from just touching the order block and pushing off. But anything is possible. It probably can pull back to the 50% if needed. But we are follow trading management and we are follow a particular understanding of the market, so we are stick to that. We're not confuse it. All right, so this is on the 24 hours, the 24 hour, the 1 day. Let's go to the 4 hour time frame. Because while we did get a market structure shift on the 24 hour, we need to get a market structure shift on the time frame that we're looking to take an entry from. That would still not be the 4 hour because we're not looking for enter from the 4 hour. But we are looking for an entry from the time frame where you look for enter from. Be it the 5 minute or the 1 minute, we want to see a market structure shift. We want to see a trend, pull back into discount, find support, sweep liquidity. After it sweep liquidity, we want to see break out of the trend and give us a market structure shift. Hopefully you guys are taking note of this.
Yes, man, bro. Yes, man.
All right, good. Now that we're on the 4 hour time frame, let us just observe for a bit what we can see regarding structure. We can see that we have a downtrend here. Same downtrend that we highlighted. Naturally, let us go on the line chart for a bit and see what we can pan out about what has taken place here. And this low put in this high. This low here put in this high. This low here was taken out by this high. And why I say this low is because I am looking at this here as an internal trend right here. This high is higher than this high. All right. So we had a uptrend here. We had an uptrend right there. So it was an uptrend, which became a downtrend, which became a downtrend. Uptrend became a downtrend right there, and we can see that this low is the low that put in this high, and this is where the market moved from a seller's trend to a buyer's trend. That is where it broke. So what it means is that because this is the low that put in this current high, it means that if the market is to go back to a seller's market, it has to break back this low to go back as a seller, which it did. It broke that particular area here and gave us a market structure shift. And because the area that caused this break to happen was this high, this low put in this high put in this current low. We're expecting that if this high that put in that low that caused this market structure shift is taken out, we are going to get another market structure shift. Okay. All right. Now that we get another market structure shift now, we are now expecting that the market should, if it's going to definitely go for a confirmation that is we're in a buyer's market, we need to see that we get another consecutive breaker structure. We need another consecutive. We need a consecutive breaker structure. But likewise, this is on the 4 hour. We're not going to fully confirm that we may or may not get it. So this is not enough for us to take a trade-off. We are still identifying what the market is doing, and we are hoping that it should give us a market structure shift. But let's pay attention for a bit. This is the low here that took out this high. This are the low we take out this high. So this low took out this high. And let me just go on the line chart for a bit, just to observe. Sweep here. So after the market structure shift here, we got a confirmation that it's a seller's market. Briefly. So this would have immediately made this point of the market here. So this point of the market, a downtrend. And since this made it a downtrend at this particular point, what it meant is that this is the area of the market, really and truly, that pushed the market from here to here. So what it means is that if I have a draw my Fibonacci, I need to be drawing my Fibonacci level from here to here. So that also means that I should or could have taken a position for an entry right here. Stop loss below this protected area, and I would be aiming for the fair value gap, because potentially what can happen is this high may not be taken out also. Anything is possible. It might not get taken out, but for one thing is for certain, we have a gap right here. We have a gap right here from this week to this week. So this week did not come back and close anywhere above this part of the body. So what that means is that we have from this week to this week, this is a gap in price. That price can come back and fill for sure. So this would be the area I would take profit. More than likely that I will go on to, it's probably I will go up there and take profit. So you see, just crazy. We have a meeting here. No. No. Trading. We have a meeting. Please. Soon come to. Close the door, man. Close the door, babe. You while you're here. I'm talking, eh? Check it out on safe receipt. Follow up right this. Alright, so you guys understand everything I've explained so far?
Yeah, well,
Okay, wonderful.
Catching on, catching on.
Sorry? Are you catching on? That's what they said?
Yeah,
Okay, good. Alright then.
nah, hear me good.
Yes, man, may I hear? May I hear? Okay. Alright. Now let me remove this.
another question, bro.
So this will be the engulfing candle what we are look for. So you see right here, so we would have had the perfect, yeah, right here we would have had the same engulfing. The last sell candle and then the buy candle right after. Well, it would have been both of these candles because this green candle is where we had the sweep of liquidity on this side, and then this buy candle now swept. So I would have highlighted both of these candles here as the order block from this area. So that's where we had the engulfing. And now you would have taken your entry here now and ride the wave. Depending on the lot size where you enter with now, you would have made a good piece of money off of this, essentially. You see, you had a question?
Yeah, the question would be, right where you have, what you call it, the gun, the parallel
Channel?
trend lines.
Yes, sir.
You mark the market structure shift up there, right? But well, it have to break the last high. What if it did? We have the what I call this equal internal highs. What if it went there and then go down look lower without giving us the market structure shift to the top side?
I don't, I'm not fully grasping that question.
All right, you have the break of structure in the middle, right where you have the what was that again?
This.
24-hour order block.
This you're talking about, yes. So this would have been a
Right,
so this
right.
would have been
So
a higher time frame
the one
market
above it
structure.
now.
So this would have been a higher
Oh,
time.
right.
So this would have, so the market
Right.
structure shift remind you, remind you that we have you're not incorrect for asking that question. At one point I did ask that question to someone my earlier stage. So this is a downtrend, right? And that would have mean that this break of structure is because of this high. This high put in this low. So that essentially means outside of this trend we have here, so this internal trend, we have an internal market structure shift here, so right?
That would mean, guys,
Right.
the mind me I say, I would think that is a market structure shift as well, but it's just now me understand it's a lower time frame.
It's a lower time frame market structure shift. So that internal one now,
Right.
if you entered here, and you would be aiming to take profit between these levels because you're not sure if it's gonna break that structure here. You're not sure unless it
Right.
do it. So that's why you have a wick here. So as the market approached this zone, it rejected, and it could have rejected here and continued selling down to the downside from here.
Right.
Yeah, man. So
Okay.
just looking at it, man, I tell you that it's a thing that can actually confuse you. It's confusing depending on you don't want to overload the charts and mark it up with too much things because you don't want to confuse yourself.
Right.
You have to know which trend in the structure you're focusing on. So at this point, I was focusing on this current downtrend that was here. this current one. This was the point of focus. And while there was a downtrend, internal downtrend, mind you, we also had a overall downtrend. This was an overall downtrend. And since this was an overall downtrend that we had, we can basically say market could have sold here, or the market could have sold at this point and drop.
Mm.
We could have looked at it that way because we're looking at the
See,
market
see.
as a downtrend.
Mm.
But it gave us a strong break here, so this was a strong break. The body close. The body close above the wick.
Oh, okay.
It looks small and it might not look strong to you, but the body close. What's significant about this is that the candle body, closed above the wick.
Yeah.
That's what makes it so significant. No matter how small it
Okay.
might be, closed.
Oh.
Yeah, man. It closed above the wick. So this made it a significant shift. This made it a significant shift in market structure. Okay. Let me remove this trend. Sometimes this is some guys mark off even these trend lines here, And what I realize is that when them realize them get a break out of the trend line and it form this sell candle, them immediately just enter the trade. Because them already know what is coming.
Start sell.
Now them start buy. Not enter for sell, man. Them start buy, man. As
Once you break up. Okay,
once
okay.
it break out of this red trend line that we have here, so man, them
Okay.
enter and say, yeah, man, this look like a buy, man.
Yeah.
This look like a buy.
Yeah.
Let me take an entry on this same time. Take a chance. So you see some man enter some trade.
So you the chance it hold on. So you the chance a buy right before the market structure.
Yes, sometimes we do it.
To the upside, even though
Sometimes we do it, man. You know why we do it? Because we are looking at the overall 1 day uptrend. So we mind tell we say we are looking at this overall uptrend now we are say respecting that it's a trending market that is trending. Why not take a risk and enter right here? Why not? Why not? Some man take a chance. Them sometimes the market knock them out, But sometimes the chance where you take that chance will determine if you make 5 bills by tomorrow morning.
True.
Yeah. That's the chance will determine say
Just you see, because my meet in a situation like that already where the trend go down and it won't seem to me just don't know whether to read to say it's sure, it's a fact to say yes, it go buy in such a case.
Right. Or another point to note again, Another point to note. You only use the Fibonacci retracement for break of structures, not market structure shift. So mind you, anytime you get a market structure shift, the Fibonacci is not really relevant to use. If you want to use something significant to take a trade using the Fibonacci, wait for a break of structure. Fibonacci is only useful for trends where you get break of structures. And that is why at this point, right after, I got the market structure shift right here. Significant to note, which you probably wouldn't even see unless I go on the 1 hour time frame. Let me go on the 1 hour. Go on the 1 hour and show you. Okay. So right after the market structure shift that we have right here, we got a right after that we had breaker structure right there. So it's a breaker structure that we have. And the funny thing, when I get a breaker structure you're looking for, with the breaker structure, the market is always going to respect anytime you're using the Fibonacci from the low point to the high point of the trade. Hold on. So we got a breaker structure right there. You draw the Fibonacci level here, so from the order block to the high, you set your entry from the 0.786 zone. The market is always going to pull back to the 0.786 where you have the trend start, because the trend start after the breaker structure. So this would have confirmed say the uptrend start now, and you have now pioneered on your way now. Jump in, get a clean entry. That's why you see a lot of the trades I send in the group. For the ones, the most of the ones that connect, I catch an entry after the week. Cause I see it already. I already know what I go play out. Always I catch an entry after the week. Always. Because get the confirmation. So all me I do a jump in now and claim my piece of bread. Alright. Let me kind of clean up the chart a bit now. Kind of clean this up a bit. Let's not crowd the chart too much. Now, any questions you want to ask? Any question at all?
Can't find none now.
Alright. Let me go up on the next market. I go up on Volitility 100. Alright, which trade you like for look on? The most.
Anyone? Something we are learning, market structures, it don't really matter which one.
Back to the 24. Let's take a look at the line chart for a minute. Line chart is showing us here that we had a downtrend. A downtrend here. Alright, there.
Oh. So that the market structure shift.
Yeah, we have one right there. One right there. Market structure shift right there. And continuation of the downtrend. But this was a downtrend here, so. Meaning, so now if we get a shift back at this point, have a market structure shift back to the upside. That's where we had a market structure shift back to the upside. Right there. And because now we have a market structure shift here, we can use our beautiful Fibonacci retracement from week to week. And I would have just placed my entry here.
Lovely.
Stop loss below these protected lows.
Very lovely.
And since we have a entire range of liquidity, the market never pull back once within this zone. This is all liquidity. We have a fair value gap here. And let us just use a line chart for a minute. We have a uptrend right here, uptrend broke right there. I'll be looking to take profit where the trend broke. We're at,
Hold on. Take time. I'm gonna try right. All right, so yeah, look all right.
so where the trend broke, that is where I would be looking to take my optimal take profit in this particular trade.
Mm,
Yes, man. Beautiful distribution. Okay. Have that?
yes, man.
Okay, good. Let me remove this now. We are focused on what I go on currently. We'll keep this line that we have here, so as a form of support, because where the market had broken structure to the downside, that's a breaker block, our key level for market finding support to the upside. So now, since volatility 100 now, looking at it, we can now look at the external market trend that we have here. Market broke this low to go lower. Market break back higher levels here. Let's see. So the trend ended there. That's where the trend ended for the downtrend. And the uptrend started here and ended. Uptrend ended there. Break of structure. Break of structure. Break of structure. Clown this. Another break of structure there. And this is where the market gave us a major structure shift to the downside. Out of the uptrend. Let's go back to the candlestick chart. Now, if the market gave us a major structure shift here, then we need to see what it does here. We need to see if it's going to give us another major structure shift. And wait. Need to see what it does. And if it gives us a major structure shift right there, then we need to observe the trend that happened within this area and see where is the optimal order block that we're going to take entry from. And I believe just by looking, this would be where the market created an order block. So we have to wait till it break first. Because once it break and give us a major structure shift, then we can expect it to pull back here for an entry to go higher. We need to see something like that. Let me check the 4 hour time frame. Mhm. So basically, it doesn't matter, whether we're on the 4 hour, the 1 hour, the 15 minute. We are always going to be looking at trend, even on the 1 minute. And we always wait for the market to break out of a trend and give us a market structure shift. Even when you're taking your
Mm-hmm.
entry, wait for the market structure shift. If you confirm the market structure shift on the 1 hour, move down to the 15 minute. Once you confirm it on the 15 minute, move down to the 5 minute. Once it's confirmed on the 5 minute, go to the 1 minute and enter after you confirm it on the 1 minute.
See.
You're looking for this market structure shift. You're looking for a trend that pulls back into discount and gives you the same schematic that you're seeing on the 4 hour and the 1 day. So you want to tell a man to enter that trade. This is not a trade. This doesn't follow the schematic that we're trading until it pulls back into our zone of interest. So this is a thing where you have to sit
But
down.
it confirmed.
It,
But
it,
it confirmed the market structure shift on the 4 hour
no,
though.
on the 4 hour, in a so solid on the 4 hour. Not solid. I need
So
another
you
break.
want it to have a stronger bullish
Yeah, need a strong.
confirmation
Yeah, I
then.
need a stronger candle.
Okay.
I need.
Okay.
Yeah, I need a stronger candle than that. Something has to be stronger than that. It's still workable, So if it doesn't go back up, I would say okay, this is workable. However,
Okay.
I need a stronger shift. I need a stronger shift. I need something stronger here. Now let us take a look a bit here at the trend that we have on the on this current market on the 4 hour. So let's take a look at the trend itself that we have. Let's go on the line chart. Market always sell after it sweep liquidity, which it did. It swept liquidity here and it filled a part of the order block. So it sweep these highs. So I would have expected that it would have probably had sold at this point. So we had these candles, these strong momentum candles right here.
Uh-huh.
So we had those strong momentum candles right there that showed that it gave us a market structure shift right there. Because this would have been the downtrend.
Mhm.
That would have been the downtrend right there. So this is where we had the market structure shift that we're looking at. And if this is the market structure shift,
Okay. Okay.
if that is
That's what ever trick me.
that's why I said pay attention to trend. Pay attention to trend because remember,
Yeah, no, me get you, man.
market always sweep liquidity before, so it sweep these liquidity. You see them liquidity over here, so
Yeah.
these were swept. They might get sweep out, and it stays and go up same time and pull back same time. Like it gave you a buy to sell. So it's like it a try farm an order block, but it never respect the order block. So it buy up same time and it sell.
Okay.
So that would have come like you have a green candle, a black candle here, and you had or let us say you had a red candle. Cause red represent no green, cause green represent buy, and red represents sell. Let me change this to red. So that coming like we had a buy and a sell candle. So what we know about that is that whenever buy and a sell candle, this is a order block right here. So it should have pulled back, not taking out the high, and respected it and drop from here. But it did not do that. It should have pulled back into it and drop out of the sky. However, it
Mm.
never did. Instead, what it did, it broke through it with momentum candles. Again, you're not afraid. You have to read the market. So
Yeah.
this is where we got the market structure shift back to the upside. MSS. Therefore, if that is the market structure shift, then this is where we had the break of structure. And if that is the break of structure, it means that it means somewhere in here, so the market will buy up and pull back, so you can take a trade to go higher.
Is it safe? Is it safe to say after well, I think me hear that you mentioned after a market structure shift, a break of structure is confirming that yes,
Yeah,
the market is
yeah,
going in the direction we shift.
yes,
Or
it's confirming it. So you can look for it. Mind you, remember that the market has to sweep liquidity, and what we're looking at here on this side is some liquidity. So after the liquidity gets sweep, we're looking for another. In here, you're gonna go on the 15 minute or the 1 hour or whenever, and you're gonna look for a market structure shift. So it keeps creating the same thing. It keeps doing the
okay,
same thing at all times. But one thing for sure and for certain,
confirming it down to the last minute.
down to the last minute, you have to confirm it down to the last minute. There is not much I can do here.
Structure shift.
There is not much I can do unless I'm seeing a trade where we can break it down straight down to the 15 minute. But this look like it's still in a buy trend going up same way. So essentially, if I go on the, let's keep everything else we have. I think I put in this line, but you know what? Let me change the line texture to that. Is Kenisha still here?
Yeah, I'm still here taking notes.
Okay. Now let us go a bit further down to the 1 hour time frame. So the 24 hour to the 4 hour time frame. And 4 hour is a good time frame to show price action. It shows the order blocks them clean, everything clean. It's one of my favorite time frames to stay on, whether I'm trading VIX or Forex. It's a place I like to stay and observe. All right. Okay. Let me pay attention. We got the market structure shift here. Yeah, we got the market structure shift here. And let's pay attention a little bit more. After we got the market structure shift, we have this is the engulfing, this is the last sell candle, and this is the buy candle. I'm not sure if you're seeing it. Are you seeing it? This is where we had
Yeah.
the last sell candle that caused the market structure shift and the buy candle. So I would mark off this as my order block optimally on the 1 hour. This is, let me delete this. I'm refining this now. So this would have been my order block right here. Perfect order block. Perfect. That's it. And all I have to do. So for volatility 100, we are still in an uptrend. We are still in an uptrend until we can confirm for sure that the market has confirmed change for a seller's market. And we cannot confirm that the market has changed direction for sales. Nothing is confirmed as yet. So we still have to view the market as a buyer's market until we get that market structure shift. So we're on the 1 hour time frame. I have marked off um my 1 hour order block and point of interest that if the market pulls back there, that's where I would aim for an entry. Let us,
Question, bro.
yeah,
If where the market currently is right there, would you personally you would narrow in and look for confirmation to go in a buy up in such a range,
you can.
like the price leg?
Yeah, you can. You can look for something, but you have to know exactly what you're looking for, and you still would have to observe trend. So even though it's a 1 hour and it's still structure, it is still structure. So essentially, you could look for something
Wait.
and take a short scalp, and I have to say scalp because it wouldn't be any kind of long trades at all. It,
Mm.
you would look for a scalp in it. No,
So once
this is not really giving us much of a structure to look at. So let's go to the 15-minute time frame. Now we're looking at the 15-minute time frame. Maybe I should have given this a better zoom. All right. Okay. Can focus on what we're seeing now. Let me delete this. All right. So based on what we're seeing, essentially, it's showing us that we're in an uptrend. Uptrend as we speak. Market is creating higher highs and lower lows. However, let's identify the last break of structure in the trend or the current break of structure that is there. This is the current one. And if that is the current one, we're expecting that this would be the next break of structure that should be coming after. Because we're respecting the fact that it's in an uptrend. All right. If that's the case now, we want to observe where the current order block is that this particular area of the market reacted from to see how structure is defining itself. So we're looking at the current downtrend here. This is the downtrend, and these are the buy candles, the engulfing candles that the market use to break out of the trend. So that would mean that this sell candle here is the order block. And what we can clearly see from that is that right here, the market perfectly topped the order block. Perfectly, sniperly topped the order block. Hold on, let me zoom back as I was. So the market sniperly topped the order block for a trade. So I would have put my stop loss right below that level. And, respecting SMC or smart money concept, I would be aiming for. My stop loss would have been right below this zone at that wick. And I would be aiming for these highs. on the 15 minute. This would have been a 1 to 4 trade, a 1 to 4 risk reward. So I'll be risking maybe $10 to make $40, or depending on if I'm going to increase the lot size, you know, it could be a $200 trade depending on how much lot size I decide to use. Doesn't really matter. The more you increase the lot size, the more money you aim to make. So let us check the Fibonacci for a minute, and this low put in this high. So extending the Fibonacci from this low to the current high that it's at right now. Let us see where my risk rewards would take me. I'm adding negative 0.25, negative 0.61. So I would be aiming for negative 0.61, and that would have increased my profitability to a 1 to 7 risk reward ratio. Yeah, that would have increased it to a 1 to 7 risk reward. Yeah, this would have been a perfect trade. Nice.
Right on timing.
Right on time, right on time, right on time. So really and truly, this is a strategy. You can use it. This is see that? It's the same thing I've been applying on the 24 hours and the 4 hours. The same thing. Breakout, bullish order block, engulfing, last down candle, using the last down candle as my demand zone. And that is where I'm looking for the market to touch so I can take an entry. Stop loss below the zone. And aiming for the previous high, or I am aiming for 0.61 or 0.25, negative 0.25. So really, trading is not hard, and it's just that it follows a set of rules that you have to understand, and you really have to focus while you're marking up the market. You have to be focusing on how you apply what you have learned. You have to also focus on looking at where the current trend of the market is and what different trends are there within the trend that you're looking at. Right? That is very, very important. All right. And take note, where the market broke out and created the major structure shift here out of the last downtrend, I drew the Fibonacci level from this low to the current high.
Right.
Take note of that.
So it's really broke out.
Yes.
Yeah. From the previous. All right, hold on. Let me get right in.
Hey, this thing is sensitive to sound. Just talking is loud. Just don't talk again. All right, you guys can still hear me.
Yeah, man.
The background fan.
Yeah.
Background fan is too loud.
No, I'm not here now.
Okay, good.
No, it's good.
Okay, good. Wonderful, wonderful, wonderful. Have any questions you guys can ask? Any questions at all you can ask? I have everything clear as crystal. Let's say clear as crystal. Crystal clear?
Which side?
in a clear crystal, but it a come.
It's a come.
I need more time.
Okay,
Yeah.
wonderful, wonderful, wonderful.
Well, actually, I've been struggling with order blocks, and I think it was cleared up better for me tonight.
Okay, wonderful. Well, I'm
Yeah,
hoping
man, definitely.
with this enlightenment tonight, I'm looking to see some profitability in the group and stuff like that. Looking to see,
Definitely.
looking to see everybody making funds and wonderful and all these wonderful things.
Definitely. I start actually sending charts in the group.
Right. And pointing out I'm making a recording of this session, so after I will make you guys have it just in case you want to go over it.
Definitely. Appreciate that.
Okay.
Yes, please. I can dissect it a little more and listen and go back to it like comb it. Yes, please. Thank you.
All right. Wonderful. So this strategy that you see I'm applying, I would like for you the guys to apply this same strategy. And I want you to take note of the fact that every different pair in volatilities carry a different volatility, heaviness in price. So volatility 100 here, you can see it's in the 2000 bracket. If it's volatility 75 1S or 75, it's in the 85,000 bracket. So depending on the pair you're trading, each carry a different lot size, and each lot size can be either be very heavy or could even be heavier. So depending on what you decide to trade or what period you decide to focus on, you have to, work on your risk management or calculate your risk management of how much you plan to have on your account, how much position you're going to enter for the trade, so that you don't enter on the trade, knock you out before the actual move start, and also the amount you plan to risk. Those are important factors. Next thing, you don't want to trade every pair that you see. Though you see me mark up a lot of pairs and send in the group, I don't send all of these pairs because I'm trading them. I send them because everyone is diverse and they're looking at different pairs. So I try to accommodate looking at each and every chart to give whoever is pre in these markets a different perspective so that they
See.
themselves maybe can learn from it, or they can look at something and say, oh, I missed that, or I didn't see that. I even point out that, or, no one is perfect. Even point out that, oh, Dev, you missed something, or show me a different perspective of the bias that you're looking at.
Question. I know you must, in your starting years to know, you must experience where you enter the market and the market seem to immediately reverse on you. Since you learn the technique and applying it correctly, have you ever met in such a scenario?
No, no, I'm not.
Alright, so you just need to know where you look for at what point and be more accurate
You have to know
and
what you're looking for.
feel like the market a reverse point.
Yes, the market will not reverse on you as long as you have confirmed that it has given you the market structure shift.
So it does reverse when you're out of farm, but when
Yes.
you're in, okay, okay.
Like the scenario we mentioned previously about sometimes we see a trade and sometimes guys will enter before them get the confirmation. Them just see the initial part or about like looking at this, we got the order block form here, buy to the upside. So some guys would probably enter right here. They wouldn't wait until it break again, giving you the breaker structure. So what tend to happen sometimes, it gives you this touch, fail to break, and start drop from here.
Yeah,
And it start drop from there now, using this as the supply zone. Touch this
Question.
and drop out of the sky. Yeah.
I finally have a question. So the point of entry is usually after the break of structure.
Point of entry is after. And this is what we call the retest. Wait for the retest. And that's why I say some people are impatient. So some people feel like, hey, me gonna enter because me a genius. And sometimes it work out, and sometimes it don't work out. And here the
because
mistake where some guys make
because
now.
them account big.
Some guys see the trade, or sometimes some guys see the trade, Them see say tap the zone when they mark out like this, And them say, John, the trader run left me. So them start enter up here, up here, and up here. And then them make them that they don't remember that the market is gonna retest and it pulls back and take them out because you enter in premium. How can you be entering in premium? It's a buy market.
Yeah.
Wait for it to pull back.
Right.
Sometimes anxiety take them in and them say, John, with the money I miss me. I look at my market up and it gone. If you mark
Guilty.
if you mark up and gone, just relax. Reanalyze the trade. Look feed if it come back. Pray if it come back. And when you see it come back, now you enter. That's why confidence is important. That's why whatever you mark up, you have to be very confident about it. Know the schematic that you're trading. Don't get confused. Don't listen to what I say here tonight and go watch a YouTube video where say something different and confuse your mind. Don't go listen to what I said tonight and see somebody post a trading video on Instagram about a strategy and you go up on the chart and decide you're gonna try that. Too much different incomplete strategy that you don't know where it's coming from or how it actually works. Even though it might work for them, you don't know what makes it tick. You don't know what confluence and what time frame they're trading this strategy on. Work with what you know. Work with what works for you. My way of trading might work for you, it might not. You might still have more questions as you go along the journey of trading, but you have to find your own way where you're comfortable with so you can trade the market. And the only way you can do that is by understanding the market for yourself so you can take out your slice of the cake at the market where you say, yeah, this is what me decides me I trade. This is what me know for sure say I gonna win. And this is the strategy that I have come to feel comfortable using. It doesn't have to be 100% win-win. And we can tell you 100% facts that no trader we have in the world right now has a strategy which is 100% win-win trade. A lot of times, 20% or 30% of the time when I mark up trades, 30% of them fail, but the additional 70 wins. I can't tell you which one I gonna fail or win. I am just marking up the schematic for what I know works.
And if you follow what you know works,
It
then
it will work out.
yeah,
If you catch a 70% win, you have profit. And if you catch 20% or 10% out of the loss, and you still get 70% win, same way or 60% win,
yeah,
it's still a win.
yeah.
Couple losses, more wins.
Makes sense. Makes sense.
More wins. Difference between you going on the market and trying to make a money versus the man where trade and him lose the trade and him reevaluate why him lose it. You going for gamble to make a money, him going to learn something new. He might review it so him can grow from that mistake we make. And that's how me along the way actually learn to understand the market. It wasn't based off any mentor or anything like that. It's just me watching the market show me what it do. Yeah man, a majority came off YouTube video, I'm not telling a lie.
Get
YouTube, but YouTube wasn't enough.
yeah, yeah, yeah.
Yeah man, it wasn't enough. It wasn't enough. Dedicate yourself to the craft, man. 'Cause remember, when you reach 50 and 60, you still have to do 9 to 5. At some point, the system will tell us say you reach retirement age. So nobody feeling away about staying up a little bit more late in the night just to mark up some charts. Might help you get closer to the millions faster. So you can retire faster. Younger.
Makes sense.
You get what I say?
Fresher.
Fresher.
Yeah, and like
Find yourself on the coast or maybe even overseas or Dubai. I go in a one
appreciate
jewelry
that.
store, I buy one mud watch or a sandals or a purse.
That.
Okay. Sipping on martinis and them wonderful things there.
That good.
Yeah, man.
Well, me nah like this me watch whole heap of video me get some overspan where them a teach like ICT and them things. But me nah lie, like this breakdown it like it give me my mind a whole different like me not think I sleep tonight, like me have up too excited in my spirit right now. Me have up a try mark up a mid well. I pick out 3 charts at least.
Go slow.
Mark.
Work with trend first, man. Work with trend. Work with trend. Work
Right.
with trend. Work with trend. And remember, we have this little session now. I'm gonna tell you something that is very common. You watch it now. You see, if you're not immediately going to practice and start reinforce it a bit, blow to your brain. It's just
Yeah, yeah, yeah.
evaporate, and that's why I took the liberty of recording the session as we're having it.
Makes sense.
Yes, but guys, I'm gonna do sessions
Thank
like
God,
these.
because I'm tired.
I do sessions like these a lot of times with the guys. Them tell me say we need to start record, or them tell me say we need to start the mentorship, or we need to start do some YouTube video. I would love to do these things, but me not feel like I want to sell the knowledge. Learning not
Yeah.
learn the knowledge free. Me not feel like I want to sell it. Me not want to monetize it. You see me?
Mm.
No, me not want to monetize it. We have a group and we have a system and we work with the system. If me even monetize it, I want to with the people in my group.
Funny enough, we did end up jumping on trade. We call it a signals group.
Yeah.
I don't know if I definitely saw him go still, but every single time the man shoot out a signal, by the time the whole community jump in for the trade, literally the trade reverse. Seriously. Every morning, like one night time, me not enter none of the trade. Every 3 o'clock, I be a gold the dad with that trade. Every 3 o'clock or 2 o'clock there about me see something I forward in, I'm up till me
Sound like a
stop the
scam.
trade, then me start watch it now.
So
And I realize I lie. Me now watch the trade first, and me see say him a
you
bingo,
have
him a
some good
bingo, him a bingo.
signalers.
Me I say no man, the dog accurate. As soon as me start jumping from them, they are pay every dollar me
The
lose.
trade gone. The trade gone. So what that mean is that that guy is trading. So he might bingo, He's either trading a demo account and he might use a heavy lot size and he might take the trade in for 1 minute. So by the time you guys see it, the trade touch TP long time and gone.
Gone,
As in bingo say,
gone,
alright. Scam that.
gone.
That's scam. If you can't mark up at least a
Yeah
15-minute
man.
trade, that's a scam. That's not a
Right,
signal.
right.
Unless input all out up on a copy trade system. So every trade where him take, you guys would catch it. So it means owner that make a profit. That's the only way. Because why am I in a VIP
Mm,
group or a signals group if I can't make any money? And the trades as I'm going to enter, everybody is in negative. We're not gonna say that the trade that he sent are correct, incorrect, but they are 1 minute trades and gold moves very fast.
yeah,
Quick,
yeah.
quick, 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 quick.
By the time I do it for real, a 1 minute it done bust up, break a
And
structure
by
and
the way,
come back the market.
like over there, let us pre gold for a minute, cause let's be gold a pre. Let's look at gold. Beautiful gold.
Beautiful gold.
Wow. So gold has been in an uptrend non-stop.
Mm-mm.
It has been in a non-stop uptrend. Okay. Now we need to find the last break of structure. Let me use the line chart. Need to see the last place it broke structure. Last place would have been here. That would have been the last place, and I need to see where the last part of the trend was. And by the last part of the trend, I mean the downtrend, so I can see where the demand zone was.
Mm. Hold on, there, bro. You never ask me for the hold on there. Because when I use this little thing I already know and put it in a step to step by step as you speak and go along. You mark the trend, you mark the breaker structure, and then you look for the area where the market broke out a structure to see the order block. Really, the right thing that is break us, we broke out of the structure.
Yeah, that's the area where it broke structure. And why I say that's the area is because this high swept this high, so we get a pullback. And normally, once the market creates a internal high, it always sweep
New
the,
high.
a new high. Once it creates a new high, it always sweep the previous high because this is a downtrend, legitimately. I draw a trend line. So, as a legitimate downtrend, if the trend is continuing, then that means that we get a sweep of this high, and then we should get um, a market structure shift, which would have been this right here. That would have been a market structure shift, MSS.
Uh,
So therefore, if that's a market structure shift, it means that that's a market structure shift. It means that this high, that swept liquidity, is the bearish order block. So the market should have been selling from this area. And because it never sold, what it did instead, it gave us these it gave us these buy candles as the engulfing. And here we are. Here we are. Okay. And it would seem that the market is going to come back to this zone. Looks like
because it shift again from the upside.
yeah, it looks like the market is coming back right here. Based on what I'm seeing. And yeah, might come back there. But let me observe the market closely. Because the market can still find support in these areas. So let me go on the 5 minute time frame and let me focus on this area. I have an uptrend here. I have a high here that got swept. Now, break of structure, last break of structure of the trend, BOS, right there. And if that's the BOS, then this is the market structure shift. This is the market structure shift. And therefore, if it breaks back this high, so following MSS, and then this would have been the consecutive break of structure